they hold with less deviation, and they believe that the relief, let's stick with this plate. They say that the relief rally continuation is likely. Markets could touch 23,500 briefly. Mr. Bernstein, that will happen today. They say that higher seat tally could increase magnitude, but not the duration of the rally. That's interesting. So that's the other interesting thing to watch out for. And of course, they say the positives are manufacturing, the laggards are IT and consumption. So this is the Bernstein view. I think there is CLSA, there is JP Morgan, there is Citi, and there is BofA as well. And there is Motilal Oswal too, which is saying some of the stocks to focus on. Do we move on to the Motilal Oswal name? Yes, let's get to the Motilal Oswal plate, because there are actionable stocks. Motilal Oswal has done one thing. They laid down the categories which could be in focus. That is cables and wires, EMS, railways, infrastructure, and the stocks within those categories. So Polycab, KEI, Keynes, Sarma SGS, Sign DLM, T-Tiger, Jupiter Wagons, and Adani Port and SEZ. So suffice to say, these are some of the stocks that you should certainly keep an eye out for. And we will tell you all about what key brokers are saying during the course of the day as well. But guys, lots of stocks in focus.
And rates are out. I mean, I've been waiting for you to track that, because you've opened 23,370. This is the pre-open rates. Adani end 10% upper socket. Adani ports 10% upper sockets as of the pre-open session. This is the pre-open session. ONGC, okay, let's tell you just what's flying on the top. And this is the first few seconds. So all of the standard, disclosures that we'll see rates settle in a bit. NTPC about 6% up. ONGC, so out of the Nifty 50, all 50 are in advance. There are no declines. You're probably going to see that across the board, both the Nifty and the Sensex over 3% up. The Nifty nearly 4% up right now. And let's pull up the rest of the Adani pack as well. While we're at it, we talked about ports and end, but let's see what Power is doing. Let's see what Total is doing. All Adani green. So all of them have opened. Total is about 20% up. So they've hit upper socket and close to it in the first 2 minutes of trade. Standard disclosures over here that you're watching NDTV, part of AMG Network, which is part of the Adani Group. Soni Patnaik, Sunny Agarwal with us. We're going to do a little more spotting of what we're seeing. I don't know. I mean, if there's anything in the red today and not participating, that's going to be a big question. CG Power, 15% up. Oil India, 15% up. NHPC, RVNL, SJVN. The theme is very, very clear. Mazgaon, BHEL. So your PSUs, Bharat Dynamics, Amina, 8% up. So your PSUs, defense, economy facing, railways, a lot of them perhaps in the 54 Modi stocks of CLSA. I'm not so sure. All right, Soni, first let me come to you. We promised to get your top picks. Do you want to revise them after you've seen the pre-open race? Because the question right now for people watching this is, अच्छा ये बहुत अच्छा चल रहा है, हम क्या करें?
Of course, Tamanna, my topics were from the defense and power space. The first was BEL, Bharat Electronics. My target was 340, 350. And if the pre-opening rates, which is capturing around 325 odd levels, if it holds, then of course, just take a momentary break, and this target is still intact. 340, 350 holds very much on cards for BEL. One can just revise the stop loss to 290 if the 325, 320 levels are getting achieved. So just revise the stop loss to 290 instead, and hold the targets for 340, 350. So that's still intact. The second pick would be in Tata Power. Tata Power also, it's looking quite strong. The target is 460, and as of now, we can see that it is also looking quite good on the pre-open chart. So from current levels, if we can see 460 getting achieved, trail your stop losses to 440. That's a very strong support for now. If the 460 gets achieved, you can see further continuation towards 485 to 490 levels in Tata Power. So I think these two stocks still remain quite strong on top of the charts. And apart from this, I would like to add one fresh call from the PSU pack, SBI. I think that's also looking very strong on charts. 800 continues to be a very strong support. So as long as 800 is getting defended, the stock can head towards 900. So I think 890 to 900 can be the targets for SBI. So that's a fresh addition I'm making from the current morning pack.
Sunny, what do you think? Is there even an opportunity to make money in this market if you want to initiate a trade and blanket Nifty, Bank Nifty, stocks, long, short, anything that a trader can make money on between today and tomorrow? What's the strategy?
Yeah, good morning. I think a lot of tailwind behind multiple sectors. So what I feel is that oil and gas is the one sector where we can see some big reforms from the current government. And based on that, I feel Engineers India is which is an indirect proxy play on oil and gas capex. So Engineers India is the one stock which we like. In addition to that, what we feel is that capital market as a story will continue to do well, as we are seeing a new high on the market today. So we will see a frantic addition of demat account over the period of June, July, August, and to that extent, broking companies like Angel Broking and IIFL Securities. So capital market story, or for that matter, wealth managers like Nuama and 361. So entire capital market story looks good. And in addition to that, what I feel is that BFSI is an ultimate beneficiary in the long run. So companies like Aditya Birla Capital, where we are seeing a very good growth as far as NBFC business is concerned. And again, there you get to play the asset management company also. So AB Capital is the one stock which we like. And at the same time, one sector which we feel is bottoming out is basically real estate ancillary, so companies like in tiles, plywood, and laminate segment. So within that, what we feel is that Stylam Industry is a company which has reported a fantastic set of numbers. And at the same time, Somani Ceramic, which is one of the key leader in tile segment. So both these players which we like. And again, on defense side, I think Ajad Engineering, recently listed company, again a very solid set of number. A very niche business, 33%, 35% EBITDA margin business, doing very well. The capacity is likely to go up by 10x next year. So I think Azad Engineering is one of my pick as far as defense sector is concerned.
Just a quick mention on the dollar-rupee pair, which is also opened with a pretty solid gap up. This is in reaction to the exit polls and also the fact that the GDP reading came in much higher than expected. 0.5% higher. You've got an opening at 82.99, so about 50 paisa move on the dollar-rupee pair is what we have. This is a good start on the local currency, even in a morning when the dollar is not looking weak. So the story is about rupee strength as opposed to dollar weakness. A quick check on the 10-year, because there is expectation and talks that over the next couple of months we could be headed all the way to 6.5 on the 10-year. An opening around 7 is what we should be expecting, and that should be giving some sort of legway and leeway for new trades to be initiated there. So the dollar-rupee pair becomes important, so does the currency. All eyes after, of course, June 4th will move to the RBI policy meet on 7th of June. Sony, Adani stocks are all up blanket 10% this morning. Would it require bravery to initiate fresh longs even at these levels? 3,700 on Adani Enterprise, case in point.
So I think, Sabina, we discussed on Friday, and obviously it looks quite strong, 10%, 9 to 10% of an opening. You may see if there is any sort of intraday dip that you can get about 2% odd. Initiate the longs on those dip and just avoid riding the momentum as of now. I think that dip is going to be very important, very strong support around 3,600. So just, buy the dip and wait. Positional target, one can see, it getting extended towards 3,800, 3,850 from current levels also. I think it's just important to buy the dip and hold with that 3,600 support, which is very strong, and keep a target of 38, 3850.
We're waiting for a dip, but let's wait and watch if the dip comes about or no. As the pre-open rates have settled.
What is the dip? Is it 1% from here, 2% from here, 3% from here?
Well, anybody's call. But right now, the point being that the dip doesn't seem to be coming. No, I
tough to call, right?
In a lot of these stocks, we may not actually see dips coming in the first place. At least a dip which will enable you to buy, because you may get a dip after a particular stock rises another 5% and then dips 3%. So very difficult to say that.
I think the strategy right now is bet on strength, right? As opposed to weakness. So just because the stock is weak, don't go out and buy it. Is that's a great simple point to make.
That's a great thing
because
to do.
Look at what's weak today. Very few. Sun TV got free fillip. It's actually chun ke, you have to see the ones which are not working today,
Yeah.
and those might be specific news-based stories. But what is really working is PSU stocks. That entire index has closed in the pre-open session about 6.5–7% up. NHPC, SJVN, BEL. Now, once again to that question, if Sony says buy on dips, where are the dips?
And frankly, the dips aren't necessarily coming in the first 1 hour for sure. We still have to wait and see how the short covering happens, and if indeed the index were to lead higher from where it is at the end of the pre-open session. By the way, we should pull up the index. It's 800 points higher, right? 807 points higher. From here, if short covering over the course of the next 48 hours leads the index higher, then you very likely will not see too many dips in stock-specific names as well. At the end of the pre-open session, by the way, Adani Ports is not necessarily a high beta stock, right? It's probably one of the more low beta names within that group. That one is up about 7.5% as well. So in a lot of these stocks, the dips might not be coming. Sunny Agarwal, are you waiting for a dip? Because you're not trading. You're buying from a 1 year, 2 year perspective, maybe Sunny. What is it that you would go out and buy on open today?
Good morning, Neeraj. I think obviously dip is warranted if somebody want to construct a medium to long-term portfolio. As we all know, valuations are not very much comfortable as far as many companies are concerned. But having said that, what I feel is that there are few theme or sectors or companies that are likely to do well basis quarterly earnings. So Garware High-Tech Film is one company. Again, a leader in basically paint protection film and sun control film, reported a very solid set of number during the last week. So this is one company which we like. What we believe is that structural steel tube industry is the sector to be in. Entire pipe and this structural steel tube industry will have a very good time over the next 2 years because of the robust capex in water as well as oil and gas sector. So companies like Jindal Saw, or for that matter, Indian Hume Pipe, APL, Apollo Tube. So these are the few companies on mid to small cap side. At the same time, on large cap side, what I feel is that NBFCs are the first sector which will benefit in case the monsoon is normal and there is any expectation of rate cut. So companies like Cholamandalam Finance, which is a proxy play on auto, basically rural auto sector. At the same time, Aditya Birla Capital, which is again a play on SME lending book. So these are the few names which we like from a medium to long term perspective.
Sunny, in terms of banks, would you bet on private banks or PSUs right now? And what would be your top 3 private bank bets?
Yeah, so we would like to bet on both the names, whether it is private or PSU. So within private, we like Axis, ICICI, and one smaller name, which is an basically Karur Vysya Bank. So these are the 3 private banks which we like. Among the PSU, I would like to bet my money on Canara Bank, Bank of Baroda, and Indian Bank.
Those are a few banks that are being listed out. Sony, across the banking universe, anything that we could look at acquiring this morning? If everything is up 4–5% in pre-open, anything there?
I shared for SBI from the PSU space, but apart from the PSU space, if something from the private space still attracts my eyes, that would be ICICI Bank. I think, anywhere around 1160, 1150, in case that dip is seen, it's a very strong buy from those levels, and it's a good support. It's holding multiple support around 1120, keep a stop loss of 1120. The stock can test 1210 first. Above that, you can see it making fresh highs towards 1240. So I think this is the stock one can look for in the private space now from derivative point of view.
So having a party, 1170 on ICICI Bank, 4.5% higher is what we have in pre-open trade. Remember, these are a few bets that market participants are betting big on. So ICICI Bank, HDFC, some of the private sector banks may be doing quite well in today's trade. Nifty 50 is expected to open around 23,350. That's an 810 uptick, pretty much in line with what implied Nifty was indicating too. Now, whether we get a gap up and then settle down during midday trade and then pick up again in the second half is something we should wait and watch out for. Well, and that if it does happen, then it may give traders an opportunity to enter the markets midday trading when the market sees some settling out in the next half an hour to 1 hour as well. The breadth of the market will be very, very solid. Auto stocks also might be in focus. I know we've not talked about this, but we had a stream of auto sale numbers that showed up on the weekend, and a reflection of that will be seen on earnings. Tata Motors back up to 960. Now, that hasn't happened in a very long time. M&M is up 3%. So even across the board, auto stocks are seeing big moves. But Neeraj, the frontline Nifty is going to be the start today, followed by, I think, supporting cast will be the Adani Group stocks.
Yeah, well, you hit the nail on the head, but this is exciting times. We'll start off at record highs once again. More importantly, this will probably be the largest single-day rally in a really long time as well. But 3.5%, 750 points for the Nifty. This is exciting stuff. 23,275 for the index on open. We haven't seen the shorts covered as yet, by the way, so watch out for that. I know Agam said VIX won't decline sharply. We'll keep an eye out for that as well. Let's get up the okay, India VIX, let's leave that out, but let's get the bank Nifty and see if banks are participating. 3% higher for banks as well. So actually banks are leading the way, if you will. Maybe some of the stocks like IT, etc. might be a bit softer, but we are doing well for ourselves, so which is actually a really good thing. It will keep on moderating between 23 to 23,400. We'll keep on seeing the index oscillating. Let's get the mid caps and small caps, 3% apiece for that as well. So pretty strong start. Let's wait and watch how the rest of the day shapes up, but bring up the heat map up on the screen and show you what the large caps are up to it. Except for iShares, which is a very wobbly auto sales numbers, everything in the green. The point is, the Adani Group is leading the way. Adani Ports is up 9%. Power Grid up 6%, Adani Enterprises up 6%, Shriram Finance is up about 5.5%. Then the PSUs come into the play. Power Grid, NTPC, BPCL, SBI, ONGC. I dare say the Nifty PSE should be doing extremely well in the session today. Almost everything in the green. I don't see an HDFC Bank in the top 20, but Reliance is certainly up 3%, so that is also doing reasonably okay. HDFC Bank is just up about 1.7%. Guys, keep an eye out for HDFC Bank for sure. As the day progresses, this could be really good, and promptly, as we said, the market has seen the biggest gap up opening in 4 years. This is, by the way, in points terms, not in percentage terms, but it's the biggest gap up opening that the market has seen in so many years. Strong, exhilarating start to the day. All Nifty 50 in the green. You couldn't have asked for a better morning.
Yeah, and I think the big question over the next few minutes is going to be whether there is a spate of profit booking, if the news is priced in or there is more steam left. One reckons that there is going to be a bigger bet because remember, like we've been speaking, the short covering will now kick in and come into play as well. I want to talk about what's happening in the broader markets as well. All eyes on the Nifty, the stellar star, but is this surge being seen across the board? And the answer is largely yes. The Nifty mid-cap about 2.5–3% up on opening. The small cap also over 2.5%. I just want to pull up Bank Nifty for a second and see what's happening there. Some of these indices are actually astonishing, at least in what we saw on the pre-open rate. About 50,000, very, very convincingly. For the Bank Nifty, 3.5% up. I want to pull up the Nifty PSE, the PSU index as well, because that's where the story is today. The Nifty PSE, CPSE, where you're completely seeing a big push for policy continuity. And if you're wondering where that reflects here, about 5% up this morning. So we were wondering what we'd pick for our top stocks. Let me start with the Adani pack, because that's really where the story and the headline is across the board. Some of those covered by Neeraj in Nifty, but across the board, you are seeing a superb start for the Adani Group, and you're seeing Adani and Enter about 6.5–7% up, Adani Ports 9% up. Remember, the group has also seen its largest ever revenues, and those details came out over the weekend, about 9.5–10% up on Adani Green. Standard disclosures in place. The group has now crossed its pre-Hindenburg levels as well. So whether it's Total, Wilmer, Energy, all of them seeing a massive bump up at opening. Now, rail stocks is the other section that we want to focus on this morning. RVNL, Titagarh, IRC, even IRCTC, which had pretty poor results. But if you pull up the others as well, all of them doing very well. So all of the areas that have seen focus, whether it's rail, defense, let's pull up defense next, all of them seeing that thumbs up, that salami of sorts to the exit polls is how I'd put it. IRFC, BEL, Bharat Dynamics, all of them doing fairly well this morning. BDL, Mazagon, Cochin, some of the others that we should see how they're doing, and very, very good opening over there. Just to add one more segment to this, and we were talking about PSUs. The PSUs are the story. SJVN, NHPC, NBCC. Now, how anyone buys at these points or at this level, I'm not quite sure. But these are some of the top movers this morning, and that overall theme is very, very clear. Samina, I think it'll be hard to spot anything that's not working this morning.
20 stocks of the Nifty 500, those are the only ones that are seeing a little bit of a cut. That goes to show you the kind of breadth that the markets are currently witnessing. Across the sectoral picture, the biggest gainer, in fact, the broader markets are performing in line with the benchmark index. Mid-cap index is up 3%. Mid-cap 100 is also seeing a gain of about 3%. Small-cap index is up 3% as well. The India VIX has declined substantially, and that's worth a mention, 18% lower on the India VIX this morning. So all the way down from 26 or 25 actually on the VIX on Friday. It's down about 18% to trade at 20. So that's a huge drop in premiums as well that we've seen. Well, across a few sectors that are catching our attention, banks are up 3.5%. You've got FMCG that's lagging slightly behind. So FMCG and IT are only up 1.5%. Metals are up 3%. PSU Bank is the trade of the morning. It's up nearly 5%. Private banks lagging slightly behind with 3.5% gains there. Real estate is up 4%. Pharma is seeing a little bit of a soft morning, and I'm saying soft because it's only relative to the kind of gains that the market is seeing, up about 1.5%. Now, oil and gas also sees a 4% gain. So that's what the street looks like. It's a very, very solid morning in trade. Infrastructure names are the top gainers in today's session. So Adani Power is your top player or top gain on the Nifty 500, up 12%, followed by IRB Infra, that's up 9%. Jupiter Wagons, we've talked about how railway has been quite the Modi stock or the Modi theme over the last couple of months, up about 3%. Adani Ports, Adani Green, Adani Total. So the top 6 gainers, of the top 6 gainers, 5 of them come in from the broader market Adani names. PFC, Bank of Baroda, Titagarh, HAL, HDFC Asset Management is up 7%. IRFC, IRCTC is trading higher. Capital market names like Angel One are up 5.5%, 6% each. Real estate companies like Prestige Estate is also trading with a gain of 5.5%, 6%. Bharat Electronics, Suzlon Energy, BHEL, IOC, OMCs, BPCL, HPCL, all are seeing a sharp up move in today's trade. So real estate also looks pretty solid in trade. So do banks, so do capital market players. Motilal Oswal is up 5%. Yeah, the list is just extensive. I can keep talking.
This is our conversation this morning. What stocks to give?
Most certainly. But one group that stands out just before we get to our guests, the Adani Group stocks.
Zomato is actually trading flat. That's definitely worth a mention.
Okay.
It's lower.
Okay. Yeah, but the Adani Group is now at pre-Hindenburg levels. If that is any indication of what the rally has been like, fair and square, Friday and Monday, today, I think that group has done really well. Look at those stocks flying around. Let's get in Ravi Dharamshi, founder and CIO of ValueQuest Investment Advisors on the phone line. Ravi, really appreciate you taking this time out and joining us this morning. But exciting start to the day. How do you think about what's next? Short term, medium term, long term?
Hi, Neeraj. Good morning. Good morning to our viewers. No, thanks for having me. I think, the biggest takeaway for investors is that, India has, since independence, always succumbed to fits and starts in terms of reforms, in terms of moving ahead and progressing. So this time around, a particular government has gotten 3 terms and is probably going to get a 3rd term in a row. So that, I think, paves the way for doing some real long-term tough reforms and really thinking from a 50-year point of view, 100-year point of view, and not in terms of next 5 years of winning the next election. I think that is the biggest positive takeaway for me. And honestly, as an investor, Indian investor has been very, very, aligned with the market. But I think the missing piece has been the foreign investors, and hopefully they will join in the party too.
Ravi, so we've opened gap up, but independent of the levels, would you be a fully laden investor, or let's say if you had cash, would you be deploying that starting immediately, or are you waiting for or biding your time for some dips, if you will?
Luckily for me, we have been kind of deploying in the market even prior to this. So, but yeah, now it gets a little tougher because you'll have to start chasing even more. But if the funds do come, I am definitely not averse to deploying. Yes, you'll have to work hard and find spots where the relative value is there, or where the entire next 2-3 years of future is not yet baked into the numbers. So you'll have to work harder in finding those opportunities, but I would deploy.
Ravi, I like that line. Luckily for me, I'm wondering who the unlucky ones are today.
No, more importantly, fortune favors the prepared mind, right?
Yeah.
He's modest, but he's been brave enough to deploy when a lot of people were sitting on cash.
Yeah, so no, honestly, I mean, I think I won't say I took a call or I'm brave or anything. I think rather than apply my brains and fringe portfolio making on a particular event, we have to think long term. And from that perspective, I think we were very clear that Indian macros have never been so good. Micros are also following up. Why wait for an event?
Yeah, so that was the big bet on India, irrelevant of what happens in these elections. And I think the big trigger over here for the kind of gap up that you're seeing is that any uncertainty which was being seen in the last week has been wiped out. Look at the India VIX, 18% down. India VIX is at 20.13. Nirav Sheth joining in, CEO Institutional Equities at MK Global Financial Services. Nirav, great to have you on this very, very exciting morning. I mean, the screen's looking spectacular. I think one for the records, really. And, you're seeing that big push there. The question is, how do you move ahead from here? The internal debate has been that, okay, you will see some profit booking. At what point do you see it? And what do you do at this level?
Thanks for having me on the show. The question that you asked me is something that, that was true for last week, a year back, 2014, maybe even 2004, right? So even when you had a complete change in the government and the markets kept down 20%, that was the time to go and buy, and you had one of the biggest bull markets. So to me, the only alternative is that if you are not in the Indian equity asset class, what are the alternatives? And I believe that you don't have a great alternative anywhere in the world. I've been saying this for some time. You have got the right stacks set up for India to end up being a bubble market in the next 3 or 4 years.
No, so Nirav, just to that, I take your point. Thoda evergreen type question tha mera. Give me a chance to revise it. Yes, that question has been always there in the Indian markets. What you do at 2004, also that question was there last week. Also the question was there specifically. Let me come to specific spaces. If I were to look at the PSU stocks, defense stocks, and the valuations they have run up at, an investor who is looking at their portfolio this morning and feeling very happy also has that question, ki aaj main kya karu? After this kind of run up, can you sustain above 23,000? We know now, as in the market has completely priced in what we are likely to see on June 4th as well.
Right. So I'm not even looking at what's going to happen tomorrow. Maybe the numbers are in line with what the exit polls are predicting. Maybe they could be higher or lower. Frankly, anything once you got a full majority, I think I'm agnostic in terms of how the current political dispensation is going to look at policy reforms going forward. To me, the key point is that you started on 6% growth rate, you have hit an 8% growth rate. Your core inflation today is lower than what is there in the US. I don't think that we are getting a sense of where we are heading as a country, right? We had a big problem with current account deficit. You are at a stage where in next 1 or 2 years, you will sort of get into a current account neutrality situation, right? So you need to look at equity market in context of where my macroeconomic variables are moving, right? So I suspect that you are not going to get reasonably good returns in the equity market, but even in the bond markets, because your interest rates are going to head down over a period of time. And that finally determines the valuation. Now, coming back to, obviously there are pockets of expensive valuations like defense and maybe some other stocks. So what do you do? If you think that the story is great, if you think the valuations are great, then you try and play with the size of the bet. right? So I can be neutralish or I can be underweight, but you still need to be a part of that. You need to be invested in these stocks because which is where there is longevity of the growth. Uh, Let me give an example. Let's try and put this in context of why this is happening, right? From 2010 to almost about 2020, you had markets rewarding a particular set of investments, which was largely consumer-driven, high ROC, consumer stocks, stuff like that. And when the market incentivizes that, you got investments that will follow that. So you got Jindal's setting up a paint plant, you got Birla's setting up a paint plant. Who set up infrastructure in the country, right? Everywhere in the world, we are short power today. Someone has to set up utilities. And therefore, what we are seeing right now in terms of utilities is that the market has to have an adequate incentive structure for promoters to go and say that I am going to invest in these new sets. That is what is happening. So this is capitalism. I am not at all surprised.
Ravi, hi. It's also Samina joining in. Big global brokerages from the Jefferies to the Cantor Fitzgerald have recently touted Adani Group stocks as a proxy to play the India growth story. And the sharp rally on some of the stocks is a reflection of that. Do you feel that there is still significant investor wealth to be created amongst these stocks, especially in the backdrop that fundamentals of these companies have also improved significantly?
No, so clearly if the exit polls are right and if this government is coming back, I think a lot of the performing sectors will perform even more. And that includes infrastructure, defense, railway, all those kind of stocks are going to continue to perform. Having said that, the margin of safety over there has definitely reduced dramatically, but I don't see a reason for those stocks to come down in any near-term thing. And I think the growth will get stronger. I do expect some kind of a change in the way the market is performing at some point of time, because I think the central government is probably going to slow down on its own capex, and private sector and state governments are expected to pick up the gauntlet over there. So the type of companies that do well might change. It will not be based on what the central government is doing, but more on the private capex cycle.
I'd like your thoughts on this one too, because you can't help but see the kind of rallies some of these counters have seen. Fundamentals have improved.
Samina, I think there's a small audio thing, maybe your mic has fallen, but Nirav, the same question to you really, and you were just starting to answer that. Could you give your thoughts?
Yeah, so my view is that, the execution that we have seen at Adani Group has been mind-boggling. I mean, I'm surprised, and I don't think that, given the fact that there are always valuation concerns around some of the stocks, I don't think investors have looked at it very deeply. And please don't get me wrong, I'm not even advocating. We've not covered, we don't have the stocks under coverage. But if you look at what they have done, for example, in the renewables, right? They've got close to about 2 lakh acres of the most appropriate land bank for solar. They are backward integrated in not only in cells and modules, but they have also started, it's already commercially operating. We are talking about Ignore. They want to get into polysilicon. I don't know how many guys are aware that they already set up a 1 lakh ton of copper refinery, right? And just look at the scale and scope of the work that is happening in the airports. Their execution is at a different level altogether, right? So there is a lot of optionalities in that group. And I think that only one group which really invested in India's infrastructure in the last 5 years has been Adani Group. And the world opens up because that is where the entire thrust is going to be. Where is the capacity to do large-scale construction? I'm just giving an example. We've seen the PM going on record saying that you want to pitch very, very strongly for Olympics in 2034. Now that is going to be massive investments, right? As a country, do we have the capacity, right? So there are some groups who have invested in setting up their capacities and at a world-class level. So I'm keeping the valuations aside. I'm just talking about the fact that some groups took a different route in terms of where you want to invest for the next 20-25 years. A lot of the groups went after the consumer-facing businesses. What is going to play out over the next 10 years is going to be entirely different.
Okay. Ravi, understand we have to let you go, but one final question really. Where is it that you now put incremental money at work? Is it, I mean, would you bet okay, at some point of time consumption will make a comeback? Would you bet on policy push continuation, and therefore some of the beneficiaries which have gained quite a bit but are expensive might still become better? How do you now allocate incremental capital, Ravi?
No, so my incremental money obviously will try and look for areas that have not performed, and especially I think large private banks or consumption-related areas. These are the ones. Having said that, in the next few months, can the momentum continue in the stocks that are doing well? Absolutely, they can. But if my prism is 3 to 5 years, and from that 3 to 5 years prism, I find investing in some of the performing companies a little bit of risky. Am I still holding on to those companies? Yes, I am, but I am not putting any more incremental money on them.
Okay, Ravi, understand we have to let you go. We'll let you go on that note. Thank you so much for taking the time out and being with us today. Really appreciate your time.
I have one question with Nirav. Nirav, you know, I was listening to what you were saying about how private sector now comes to the forefront, and really the trick over the next few sessions, and I would say not just next few sessions, next few weeks in this market is going to be to identify the new pocket of growth. If you're looking at a situation where you have policy continuity, the same kind of push to the private sector, etc., where is that growth? Where do you see the clues there? So, for example, we were having a conversation this morning that climate change and tackling climate change will become a huge theme for any government, including Indian government, in the next 5 years. You're going to push down on Make in India, PLI, and the participation of the private sector. Do you think it's very important now to identify those new pockets, and what have you been seeing? Nirav, can you hear me?
Yeah, I can hear you right now. I missed the last part of the question.
Yeah, so the last part of the question was essentially that what are those themes in your view? Where are those stocks? What are those themes? Because right now someone has to spot the new ideas. The PSEs, defense, rail are already there, priced in. If private sector is going to take the forefront, then where are those new ideas coming from? Nirav?
Right, the markets, right? But I've seen a major reform.
Can you start that? Yeah, you kind of froze there for a second. Can you start that again, please?
Not.
All right, we have a bit of a glitchy line over there, but I'm really interested in seeing that story, because that's how you will need to spot the winner, right? Because the themes that have been going on for the last, I would say, year and a half, are there very much. They will continue. Public sector companies will become stronger, their balance sheets healthier, your infra, policy push, road, railways, defense, etc. But what's next? What's new? If they have said time and again that AI, EVs, climate change, all of these areas are going to become big themes, becoming Atmanirbhar in semiconductors, APIs, what are the stocks that you then now look at as the next run?
I mean, even if you don't go that far, consumption, rural consumption, that could be one space that may start seeing some traction. Of course, those numbers haven't looked very promising in terms of GDP data. But if you see the government doing a little bit of a push to spruce up consumption, then I think rural could be one more theme that the markets may start constructively looking at. But all in all, what's interesting, and I think this is what we talked about, guys, the Nifty saw a start at 23,340. We're 200 points off the day's high point. So profit taking has kicked in as expected. Trade will stabilize through about from now till about 11:30, 12, and you may see a return of euphoria in the second half of the session. But there is a little bit of sanity that's now returning. The euphoria is settling down. PSU banks are the star trade. So is real estate. So is defense. Everything is moving up. But I think the markets may now give traders an opportunity to come back in and buy for the second half of trade, and maybe potentially even tomorrow. So watch out for stocks. There are lots of stocks that are off the day's high points. If you're a short-term trader,
what you call sanity, we're still 600 points up. So
we are, and I mean, stocks like Adani Enterprise are at the record high. So if you didn't enter these counters at the get-go, but beyond Adani Group stocks are a whole host of other names. And Nifty itself was at 23,340. That was an intraday high.
Yeah.
We're slightly lower now, so we've gone up about 150, 180 points from there. Actually, do we have any of our technical guests with us?
No, but we have Nirav Sheth, so I think we should ask him.
What do you think? I know this market should and is best divided between a tactical trader and an investor. We know what investors should be doing, right? Staggered investments, be disciplined. That's when you create significant wealth. I don't know whether you're comfortable answering this for me, but we did get a gap up, a massive gap up in the first few minutes. We made that high of 23,340. We are 200 points off that now. Do you feel that now could once again be an opportunity for bulls to maybe initiate fresh longs, maybe covered option strategies between now and today? Or do you feel like it's buy the euphoria, buy the exit poll and sell the news, and the markets may go back to business tomorrow?
So, it's usually difficult to take short-term calls, but I am of the view that the markets are gradually going to rise pre-budget, anticipating what the government is going to do. They'll probably stall over there. I'm then probably looking at a longish spell of time correction more than anything else, till the time that market is ready to try and price in a rate cut. And then, when you start looking at you get more clarity about FY26 earnings and FY27 earnings. So budget, I think, will be crucial in terms of the government trying to lay the direction for the next 5 years and 10 years. And I suspect that you are likely to have the next level of reforms on the indirect taxes, right? And without trying to get away from the fiscal consolidation that are going to move forward. And that could be a big, big trigger in terms of how the markets are going to look at.
Nirav, I think we had a patchy line, and I don't know if you could hear my question. Let me come back to it. I was talking to you about what new themes that we can spot of what is expected in term 3. I mean, what is already run up, what is already clear in terms of policy push is there. So your rail, defense, improving balance sheets of PSUs, etc. That theme is there. What are the new areas that you are looking at right now?
So I think if you just read what Mr. PM Modi has written in one of the editorials today, size, scale, scope, and standards, right? So what you want to do it at a big, much, much bigger scale. I think that we've lagged in terms of electrification, and India spends about $100 billion in oil imports. You need to get that supply chain right. So I think that'll be a massive, massive focus in terms of how do you want to set up that ecosystem for electrification in the country. You mentioned about climate change. I call it energy transition. Serious work has to happen in the green hydrogen, and then all the way into solar and wind turbine manufacturing, right up to the mining stage. And like I just referred to, I think the critical thing is that you also want to uplift the entire manufacturing in the country. And one way to...
Nirav, on a portfolio recommendation level at this stage, where we've seen whether
that is to try and reduce the median GST neutral rate. I don't know whether I'm being audible or whether we are...
we can hear you, Nirav.
Sure.
Nirav, go on. Please go on.
Yeah, so I was just saying that to me, a critical reform could be whether you can reduce the revenue neutral rate for GST, which is, let's say, about 16% to about 12%. That is disinflationary. That does exactly the same thing that happened to a direct tax. You got lower.
Glitchy line with Nirav. We need to fix that so that we can hear all his answers correctly. We'll try and get that in place. Now, while we do that, just wanted to go through this very interesting piece my colleague Mahima sent me actually. She's put together top 5 stock picks if you see results tomorrow like what the exit polls are indicating, and that's what the market is celebrating right now, still about 600 points up, 582 points up on the Nifty. So now a slew of brokerages have come out with their top picks. So number 1 of those picks is Adani Ports, which has been supported by, so this is a call by Citi and Motilal Oswal because it's projected to benefit significantly from infrastructure and logistics development. Number 2 is Coal India, that's on Motilal Oswal, Phillip Capital and Jefferies list, and they all put out their reports on pre-election. Coal India is anticipated to perform well with continued focus on energy and industrial growth. Number 3 is ICICI Bank. Now, I found that interesting. Motilal Oswal, Phillip Capital have put this out on their list. ICICI Bank is viewed as a strong player in the financial sector, expected to benefit from political stability and sustained economic growth. So the private banking space and all, but ICICI Bank is one of the favorites. SBI is the other one. Motilal Oswal and Phillip Capital have both put it on their list. They say SBI is looking like it will reinforce its dominant position in the banking sector. And then there's Larsen & Toubro, endorsed by Motilal Oswal and Citi. L&T stands out in the industrial and infra sectors as it is expected to thrive with ongoing and new projects. So there are many actually, and in fact CLS had a list of 54.
Yeah.
But the top 5 that we picked, which have brokerages going for it, and all of them actually doing very well today.
PSUs are trading very, very firm, Tamanna. Even OMCs this morning, I mean, look at HPCL, it's up 8%. BPCL, IOC also doing extremely well. 96% of the Nifty 500 stocks are trading deeply in positive territory, with a whole barrage of broader market names that are actually doing quite well. 97 of the 100 mid-cap stock gainers are coming in from the PSU pack. So that is the kind of breadth, the euphoria that the markets are seeing. Of course, what we saw on Friday was only the Adani Group names do well, but beyond that, the rest of the market, in fact, those Modi stocks, like they've been called, an HAL, a BDL, a BEL, did take a little bit of a break, maybe potentially giving investors and traders an opportunity to jump back into these stocks. Bharat Dynamics, which has been the star of the last couple of months, is probably lagging slightly behind the gain of only about 3%. But is that an opportunity to buy? And that's what we should try and understand from our trading and fundamental analysts. BL is up 6.5%, 7%. You've got, let's actually pull a Vodafone idea. I want to pick this one up because it's been, while it may not be an election theme, the stock has been seeing enormous amount of buying interest over the last couple of weeks on back of its Theo brokerage upgrades. Another 4% being added, getting closer to 16 rupees on Vodafone.
Actually, Vodafone is kind of an election theme in the sense.
If there is the government's policy.
In the sense you have, the government is now a serious stakeholder in Vodafone. They have a big bill due in FY26, and it's up to the government to make it easier, maybe convert some to equity. The direction so far in term 2 has been to allow Vodafone to exist and survive. So in that sense, yes, I would say. Nirav is back with us. Nirav, I'm going to do a quick audio check with you. Can you hear me clearly?
Yeah, I can hear you, and then, I don't know when I end up losing you, but yeah.
I know, we have a bit of a patchy line. Nirav, just before we let you go, we need to have your take on what are the sectors and themes to look out for, what would be your top picks and your advice to people today who may have hedged. No one knew exactly what the exit polls are going to say. They've beaten expectations, frankly. What is your advice to those who chose to hedge today?
I think, I always believe that you should look at equity from a 3-4 year perspective. For whatever it is worth, I don't think India has ever had a negative rolling 3-year Nifty return, ever, right? And this is through successive governments and through multiple challenges, through pandemic and GFC crisis. So that's the inherent strength of the Indian economy. You do nothing, India grows at 5%. If you're a great leader, you can grow at about 8 or 9%, right? So I am very, very bullish on the Indian macroeconomic situation. A lot of this is also being in the right place at the right time, right? In terms of the geopolitics, in terms of how it is turned out. You don't have to necessarily figure out what you're going to make in the next 1 month, 6 months, whether you want to buy today, tomorrow. No one has a right answer, right? Should equity be a significant portion of your asset class in terms of investment? The answer is unequivocally yes. It is difficult to try and create alpha. So for normal investors, mutual fund is the way forward. Outside that, to a second question in terms of what are the sectors, infrastructure and I believe that this is a big tail. So, you got EPC companies, you got pumps, you got engineering services. I'm bullish on real estate. I'm bullish on banks. And you got new sectors coming in, right? So now you've got people investing in data centers and stuff like that. So But like I said, I'm not making a case for any one particular company. We do need to keep in mind that the investments, the investment profile is changing, right? It is no longer only copper and aluminum and cement. A lot of the investment is happening in digital infrastructure, which is very, very intensive. I talked about energy transition. I talked about electrification, stuff like that. So, some 300, 400 companies have got listed in the last 4-5 years. So India has a big tail of new companies, niche.
Nirav, I think we're again having a little bit of a patchy audio with Nirav Seth, but he was talking about how there are newer sectors now that markets can, of course, or participants in the markets can, of course, go out and trade and make money in. Remember, you have newer themes that are emerging, but most people believe that the old economy could really truly be a good play even today if you want to be an investor in equity markets. The Nifty is looking very sweetly placed. Of course, it looks like it is getting closer, or rather averaging out at 23,100, which is potentially where fresh buying may come in. Well off the day's high point on the index. And you can see the chart, right? You saw that big bump up in the first few minutes, and then we've sort of stabilized as we see it. A quick check on the Wix. The Wix was down. Oh, and Bank Nifty has hit 50,000. I think that is also, that's the India Wix, down about 21% now. But the morning star is the Wix along with, there you go, 50,230 is what we have on Bank Nifty. The biggest contributor there has to come in from PSU stocks. Adani stocks continue to be drawing attention of traders and investors alike. So you've got stocks, while the Nifty is off the day's high point, stocks like Adani Enterprise, Adani Port are actually trading at their day's high point. So that is a bit of a conundrum, play that you're seeing on the street, holding on to those greens. It's pretty much a sea of green, but 96% of stocks on the Nifty and the mid-cap index are trading deeply in positive territory. I don't think there's any letting way, but I think there will be a little bit of an opportunity over the next few hours for fresh trades to come in.
Yeah, absolutely. It's going to be exciting. I think the big story this morning is also what's happening with the Adani Group, a roaring rally over there, and Agam is joining us now to tell us all of those details of what's working. I think Adani Ports is the big highlight, but overall, you are seeing the Adani Group stocks doing well, and the MCAP has now gone to pre-Hindenburg levels, isn't it, Agam?
Absolutely. So the market capitalization across for the entire Adani Group has moved above that, and well, at least in terms of the key takeaways, it's taken about 16 odd months for the group to move above that. Well, at the moment, we are looking at about $10.8 billion worth of investments coming in from long-term investors. Moreover, on a group basis, at the group level, we've seen EBITDA surge 45% to a new high of well over 82,000 crores on a group level. Moreover, on a profitability mark as well, we've seen a whopping 70% rise there as well, coming in at around 40,000 odd crores. Now, the core infrastructure EBITDA has also moved above the $8 billion mark at an all-time high level of liquidity as well, where the group cash balances now stand at just a little less than 60,000 crores. And finally, coming down to its net debt, this is something that the company has, or rather the entire group has been talking about in terms of reduction, and they have come through, and this is probably the first time that the net debt to equity stands at below the mark of 2.5 times, and that's also one of the many reasons why we have seen that was sharp up move as far as the Adani Group companies are concerned.
Well, that is the Adani stocks, all and up and about in trade. Adani Port, the darling of D Street, like we said. Well, the Nifty might be the star. This is a supporting cast. It really needs PSU banks and Adani stocks helping the Nifty trade at record levels as we see it. We'll slip into a break. We'll come back. We'll be continuing our coverage on what next for the markets, what are the themes, where should one go fishing, whether or not the party can continue even beyond the next 2 days. We'll come back and talk to Andrew Holland, so stay tuned for more on the other side.
For the past 2 years, people who have wanted to have unsecured loans one after another have had a gala time by borrowing money or small ticket loans via digital apps. But not anymore, because this has led to an inevitable over-leverage in the financial system. This over-leveraging has caused banks, NBFCs and fintech platforms to relook at their business strategy as well as credit underwriting models. Therefore, this means if you need a personal loan now, it may not be as easy as it was. Let's understand the problem better. What exactly is over-leverage? How does it affect you and me? And how is it measured? An over-leveraged borrower is when an individual has so much debt that it becomes almost impossible or extremely difficult to repay that amount. Now, to measure this, every lender, the one who gives the money, has something called Fixed Obligation Income Ratio, or FOIR. This is a ratio which indicates the lender's risk-taking ability. For example, if a lender has a FOIR of 25% and a borrower has taken multiple loans from different entities, then in case the FOIR exceeds 25%, the loan application is likely to get rejected. For banks, the FOIR is low, and for fintech platforms, the FOIR goes as high as 50%, which is why borrowers rush towards digital lending apps for easy money, because high FOIR for fintech platforms indicates their willingness to issue back-to-back loans quicker than traditional banks. Besides this, lenders also look at several other variables such as income growth, repayment history, bank statements, device data, and behavioral patterns to underwrite a borrower. Underwriting a borrower is basically assessing the risk related to repayment of the borrowed money. To combat over-leveraging, let's first look at what banks are doing and then what fintech platforms are doing. Banks have fine-tuned their credit criteria in terms of how much money they should lend to a particular borrower. They are also recalibrating their co-lending arrangements with fintech platforms. On the other hand, fintech platforms are now migrating towards traditional underwriting models which banks already use. They are also changing their business model from a burn and churn model to a building the book model by offering longer tenure loans. Moreover, apart from personal loans, fintech platforms are now exploring other avenues for growth, such as lending to MSMEs and offering loans against property. While all of this is going to make it difficult for borrowers who are taking and have taken multiple small value loans, the first-time borrowers will take a massive hit.
दस साल में जो हुआ वो तो सिर्फ ट्रेलर है, ट्रेलर।
कांग्रेस पार्टी की सरकार साल का 1 लाख रुपया बैंक अकाउंट में डाल देगी।
जो मर्जी करते हैं, पावर में है, पावर इज टेम्पररी।
सबसे बड़ी कोई देशभक्ति का काम हो सकता है कि 2024 में इनको हटाओ।
Different people believe in different things.
Thanks for tuning into Talking Point. It's a special talking point because the talking point today is the market, and as Samina keeps on saying through the morning, the support cast and what the support cast has done. To talk about all of that, two men who got both their political call right, if you will, or at least the seats call right, and maybe the markets call right as well. I'm using the term maybe because I don't quite know what the positioning was last week. Andrew Holland and Nandik Malik, CEO and CIO at Avendus Capital Public Markets, alternate strategies respectively. Gentlemen, thanks so much for joining in. Did this shape up exactly how you thought it is, and what's the way ahead now? Because that's the key thing. Either of you.
No, so it shaped up the way we were thinking the numbers would be. In our framework, 2019 was a tougher election than 2024. Again, the starting point alliances in UP, Karnataka, Bihar were more in favor towards NDA. So the numbers have panned out. Markets also are higher. What could interestingly happen is a lot of short covering can happen, because in sectors like banks at index level, there are lots of FII shorts. And if typically in the last 2 or 3 election cycles, exit polls haven't got it wrong. If anything, the exit polls have indicated a lower number for the Victor. In 2009, they gave a lower number for UPA when they came back. In 2014-19, they gave a lower number for NDA when they came back. So I would say there's a decent chance that even 400 could be touched. So it may not be a meaningful probability, but not a zero probability as well. So if that happens, you could have substantial short covering. We already are seeing a 2.5% rally, 2.5% rally at index level. That could easily go towards Nifty 23,500 in a very short time.
I'm asking, is the short covering dependent on a particular number of seats? Even if it's at 350 and not 400, you don't think the short covering will come in?
No, it should happen. So even then the short covering should happen. But at 375, people will throw in the towel pretty quickly.
Which people?
No,
the shorts.
So I think the foreign investors, obviously came in and hedged some of their portfolio, which is fine.
Yeah.
For that tail risk, I mean, they would be, told by their risk managers you have to do that.
That's standard practice.
That's standard practice. So they weren't shorting the market. They were just going for that tail risk. Now, if that's gone away, they're going to come back and say, well, we don't need it anymore.
But my question is, would you wait till the 4th of June? That would be too late. We're probably going to see that by this afternoon.
See, it's very easy, right? The market was down 2% last week. So just 2% is just covering that kind of fall of last week. Then you add the short covering. So easily going to between 3 to 5% today is where the market's going to go. And then if Nandex, in terms of what the brokers are saying, that you could see an upside to those numbers, then you probably got another 2 to 3% on top of that.
Let's break this down between an investor and a trader. We've got 23,100 more, as we say. As expected, we should see. Okay, want to just take one.
Okay, so let's break it down between an investor and a trader. Let's assume that there is an investor who is watching you right now, wants to understand what to do. Should he put in the money right now? Because the usual statistic is don't chase the gap up. But here the gap up is slightly different in that, as both of you are saying, that there is a possibility of a short covering, but also that over the next 3-4 years, with the earnings growth and policy continuity, the markets may be much higher than where we are right now any which ways.
Correct. So an interesting point which needs to be factored in is most investors tend to be pro-NDA in their leanings, So you will have investors thinking, okay, fine, maybe we have a gap up, but you also have the other part of the brain, possibly celebrating the victory. So my estimate is a good amount of flow should come today itself.
Nandik, I want to sort of give you a counter to that. I agree with you. I mean, there's no data to show how investors in the market feel politically leaning. They push for continuity.
Correct.
But these same investors who are, to quote you, pro-NDA, last week were very circumspect. And if in their personal capacity you would have asked them, kaun aa raha hai, they would have had maybe no question in their mind. But when it came to the uncertainty in the markets, they followed through. So,
but then you did not have the data with them, the exit poll data last week.
Exactly.
Now the exit poll data.
So you need the data.
Yes.
At the end of the day, market watches the data.
Yes, absolutely.
See, market doesn't like uncertainty, right? So it doesn't matter whether it's foreign investors, big investors, or retail investors. Now you can see a roadmap. Now you know there's a roadmap ahead. Now you can go back with that conviction that I want to buy these sectors or these companies because they will benefit for the next 3 to 4 years of the policies of the government. So that's the confidence you get back to come back into the market and say, I'm okay investing at these kind of valuations, even though there's a gap up, because over the next week or so, we're going to hear about I'm sure about the 100-day policy and what that's going to be about. And that's going to be the next trigger.
Yeah.
Nandik, Andrew, comment on this, right? Let's break this down between a trader and an investor. We are at 23,100. We will stabilize over the next couple of hours. Europe opens up. FIs come back in. We may close at today's opening. We go into tomorrow. What happens then if the exit poll is exactly a reflection of what tomorrow's outcome is? And what happens post that then? Sure, we see 23,500 on the screen. We all clap our hands. Life is great. It's back to business on Wednesday morning.
No, so 23,500 and so the way in which the markets are panning out, at least we are very short-term focused as of now. I don't think at this stage we as fund managers or asset houses
do have the ability to.
Correct. We should be looking at what's happening after 7 days. The event is a very big event. The move which will follow the event will be big. So at least we are focused for the next 36 hours. And at least my view is in the next 36 hours, 23,500 will get touched once.
Right.
So what happens after that, I'm not very sure, because it's 2.5% rally, 3% rally. 23,500 is hardly 1% away. So, you know, once that gets touched, my view is you won't see too much of selling because positions which had to be lightened have already got lightened. And now a lot of fund managers will now anticipate flows into the, let's say, the long only funds. So there's no need to actually, you know, lighten the portfolio.
Right. So in your portfolio, I mean, you run the Avendus Absolute Return
Correct.
Fund,
Correct.
and it's some sort of long short where there is a little bit of hedging that takes place.
Correct. Funds
like these do exponentially when the markets are volatile. This is seeming like a little bit of a one-way journey, in my opinion. Where are your hedges sitting? Are you still largely long? Is there a little bit of short covering, hedging on your portfolio? What is the long-short ratio that you're sitting on?
Correct. So
and how will that change come Wednesday?
Yes. So at this point of time, the long ratio is slightly higher.
How much is slightly higher?
We will not want to get into that.
Okay.
Yes. But at this point of time, we are slightly higher. The reason is the mandate of the fund is to give superior post-tax debt returns. And let's say the exit polls would have said that the number is under 300 or under 275, then even debt markets would have given you pain.
Yeah.
So the way in which we manage the position is with this kind of an outcome, we are making good amount of money today. And even if, let's say, the numbers would have been bad, then we would have fallen less than debt markets.
I think also, Serena, you're concentrating on Nifty, right? And I would say look beyond Nifty. I mean, yes, you'll have those stocks, but the bank Nifty is again,
it's 50,000 as we see it right now.
Mean, you know, it's got to
so
go.
So are you buying private banks?
It's got to go a lot higher. It just has to, with the RBI dividend, which we talked about. Like, I'm so excited about that, and you know, I don't think everyone's gone short of the banks. That's been the favorite kind of, because it's liquid. Now they have to cover that and start to say, if the economy is going to do well, which we saw those figures on Friday, the banks will follow.
And is the bias with private sector banks?
I think it's with private and PSU banks.
And also capital market play, right? With the kind of euphoria equity markets are seeing, all fund houses are going to be increasing or at least earning more money in the next couple of quarters. And we've seen some of these stocks play out so well. And if, like Neeraj keeps insisting, this is Buy India 5-year story. And if this is Buy India 5-year story, capital markets also become the best bet.
Yes, and we'll probably see that. I mean, they're sitting in quite a bit of cash as well, so they have to deploy that over the next few weeks as well. So I think capital markets stocks will do well because of the longer term. I'd probably be more towards the themes that will play out, you know, in terms of where I think the policies will be, and those will continue to be renewables, will continue to be defence, railways, capex in terms of infrastructure, and of course tourism.
Okay, and you know, just to highlight the point that both Andrew and Nandik are making, if you we'll revisit that, the YTD performance of the PSU Bank Index versus the Bank Nifty, and just shows what a rank underperformer Bank Nifty has been to PSU banks, and thereby the probability of a laggard. So this is the today's chart, but if you put the YTD performance of the PSU Bank Index, this year 37% for the PSU Bank Index, it was 29% just before the day started. Bank Nifty was 1.5% before the day started. It would have gone up a little bit, but 4.2% versus 37% just lays out the contours of where the underperformers have been. So, Andrew, you were talking about themes that will outperform because of policy. Policy beneficiaries have done well in the last 12 months to 18 months as is. Would you still bet on them, or would you look for the laggards?
I'm going to buy into where I think the growth is going to be.
Okay.
And the laggards are laggards for some reason, right? So FMCG, you know, I'm more bullish on the kind of premiumization, so that's more beverages. But the action is going to be in capital goods. It's going to be in renewables. It's not going to be in, you know, yes, rural economy might start to pick up, but it's not going to be that the top line is going to grow from, you know, 10% to 35%, right? It's not going to happen. It's going to be a slow burn up for these companies. So I would be where you're going to see huge growth, and I think these are the sectors which you need to be focused in on.
So I was just looking through this piece that the Prime Minister has put out as an op-ed after he's exited Kanyakumari, and I thought it was interesting. And right now we're speaking with the assumptions that the results on June 4th reflect what the exit polls are saying. We're currently talking about what next in a possible Modi 3.0. And I just picked out this piece because he says we will need to make several changes to move forward in the global scenario. We also need to change our traditional thinking regarding reform. Bharat cannot limit reforms to just economic reforms. We must move forward in every aspect of life towards the direction of reforms and should also align with the aspirations of Viksit Bharat. He goes on to outline 4 directions: speed, scale, scope and standards, reiterates alongside manufacturing we must also focus on quality and adhere to the mantra of zero defect, zero effect. Now, the next few days, frankly, I think for the market, for policy watchers, is going to be to understand what a 3.0 looks like. More of the same, or new ideas we haven't really thought of. And I want to come to you on this, Nandik, because the big question immediately bogging the market in the last few sessions was minutiae in the larger picture, but is there going to be a change to capital gains tax, a new view on taxation? Now, when you're talking about reforms, not in the traditional sense of reforms, do you think that is going to be a case of adjusting expectations, even from the markets, and what we've traditionally seen as, all right, these are the reforms which are thumbs up and these are the actions which are thumbs down?
No, I agree with that. So whatever you read broadly covers everything, you know. So if the Prime Minister does anything, you know, that will fall in the definition which has been given. So yes, they will do reforms. That's given. Some amount of taxation change could happen. So, for example, we are very sure that arbitrage taxation, you know, that will go away. So,
arbitrage taxation will go.
Yes.
Okay.
Yes. As in, there's an arbitrage and debt funds.
What do you mean when you say taxation and arbitrage will go away? It's taxed as equity currently.
Correct.
Yeah.
You're saying that that'll be taken off?
Yes.
So that doesn't remain attractive anymore because arbitrage is currently giving you what, 8%?
Yes, and the taxation rate is much lower than debt funds. So what is happening is a lot of money is going from debt funds towards arbitrage funds.
Which makes sense. Liquid short-term debt over arbitrage is an easy trade.
Yes, but that means that bank deposits are suffering.
So there will be a push to shore up bank deposits
exactly.
again.
So bank deposit growth is something which they can't let that number be on the lower side. So what's happening now is the industry has grown from 50,000 crores to 2 lakh crores in the last 1 year. If they don't do anything on the taxation part, my guess is this will grow from 2 lakh crores to 5 lakh crores or 6 lakh crores in the next 1 year. So an incremental 3 lakh crores goes into those funds, which will hurt your bank deposits.
So just if you take a step back a year ago when they changed taxation on debt, that's when arbitrage became, they almost encouraged money coming into arbitrage and equity funds, right? So interesting that they will rationalize it this year.
Yes, because I don't think they would have anticipated that the industry would go from 50,000 crores to 2 lakh crores. And around the same time, even you are hearing stories about bank deposits getting affected.
Yeah.
So
I mean, financial, at some level of equity euphoria as well. A lot of the fixed income is moving into equities to some extent,
but
right?
If the Prime Minister, the statements which he made, you know, if we have to be a growing economy, only equities can't power you.
Yeah.
Your debt markets, your fundraising has to be equally robust. So they can't let deposits suffer like this. So I think, you know, that is the lowest hanging fruit which I can think of. And otherwise, see, they have been very good with the feedback. So even if, let's say, they do something and the feedback is not positive, historically they have gone back and addressed that.
Yeah.
So I don't think the worry of making a mistake will be at the top of the mind. They will do what they think is right, and then based on market feedback, participant feedback, they will course correct.
They're happy to course correct.
Yes, yes.
Now, just the other point, talking about feedback. Now, we'll see what the results are tomorrow as well. But one big theme has been improving employment, rural distress, etc. Fair to assume that those are going to be big themes in the next 5 years, and then some of the sectors, Andrew, that you were also talking about beyond premiumization. If I'm talking about FMCG, consumption, everything that has been lagging also comes back into play?
Does it?
I'm not sure it does. You know, the monsoons hopefully will be in line with what everyone's expecting, so the rural economy, there'll be a push. There might be some land reforms, there might be something towards electricity again, which will, you know, change the kind of landscape there for, you know, making things a lot easier. But these are the big things that you can do. In terms of taxation, you can look at capital gains tax, you can look at many different things. But I think at the end of the day, the market will like only two things. One, the continuity, of policy. I mean, there might be some new policies that come through, but that's what the market's after. And you know, we've all kind of forgetting that we get the JP Morgan bond index inclusion this month, which will bring down bond yields. And I keep reiterating banks because, you know, it's the only play in town.
Top three.
The Bank Nifty, yeah.
So if India's inclusion in the JP Morgan index happens, we do get upgraded by the S&P in the foreseeable future. Raising debt for India Inc. becomes very attractive, and hence Indian equities also start looking good. But if I compare corporate debt to FDs, how does that look to you? Do you think that is something that may draw attention? Because the regulator has reduced the face value. There is genuinely a push to encourage a little bit of corporate debt amongst retail investors.
Yes, but the normal Indian psyche is, you know, maybe it will take a...
bank safer.
Bank safer, yes. So as of now, people are more attuned towards that thought process. But taking a step back to the previous point which you raised, I think there is a misconception that the Prime Minister is more capitalist. I think if you look at his welfare schemes, it has been very pro-poor, very pro-rural. So I think that will be the primary focus going forward.
And rural is not growing. I mean, look at the GDP reading this time. Rural is still a sour point for the country.
So I think...
the K-shaped kind of economy.
It's still, it still seems like... And you can't have GDP growth without consumption and employment. But, you know, you, Andrew, are very excited about the debt markets. We hear all sorts of numbers, 6.5, 6.6, up until March 25. Better than expected GDP reading. You've got the RBI policy meet in a few days, inclusion of Indian JPM. Post that, you'll of course have the Bloomberg Index. And as compared relative to other debt to our global peers, we are far better placed. What do you think the RBI could do on the 7th of June? Will they remain hawkish? Is this even going to be an event or largely a non-event?
It's probably going to be an event which we're going to quickly kind of move on from, because I don't think it's going to reduce interest rates.
They can't, till the Fed does.
Obviously they can't be too negative on the economy because of the figures that are coming through. I think they'll talk about the bond markets. And I think they'll talk about, you know, what they might do with this money coming in. That might be, you know, something which will give us an idea about the rupee going forward. Maybe that's the focus of this policy rather than interest rates. But interestingly, some of the Federal Reserve people have said, you know, if Europe and anywhere else want to go before us in terms of reducing interest rates, they should. So I think India still has that scope to go before the Federal Reserve if they want to.
ECB is going to do that.
But that has never historically happened, Neeraj. It disturbed the rate differential, right? And that's not what you want eventually.
But you're getting flows into your bonds anyway, so that's going to come through. Yeah. So I'm not sure. You got the leeway.
I think that's when we'll truly create history.
You got the leeway. But you know, you're right. Perhaps you'll just wait for you know.
And the Fed's not moving from the way it looks.
Well, let's wait and watch. I think the second quarter inflation numbers, if they are lower, could actually give an ammo. Because here's the deal, right? I mean, we've had a fiscal glide path laid out for us. If the government is not going to do as much spending, is the push necessary from the monetary side as well? That's the other question that comes into play.
So the only point on which me and Andrew have a difference of opinion is this. I think RBI is very comfortably placed, and they will follow the Fed because they would want that gap to, I think, slightly increase. The interest rate gap to slightly increase. RBI has done a fantastic job, and they can just you know, kind of copy what the Fed does, and then, you know, you don't have to be proactive because they have managed it fairly well till now. The other thing is people are focusing more on Fed. What people haven't factored in is you have US elections in November.
So anything post that,
Yes, and I don't know what happens with this independent thing, but in case Trump is on ballot, then there's a fair degree of confidence that, you know, he comes back. If let's say other than the legal assets. And Trump is very vocal about interest rates going down. So in case, you know, that happens, at least the US interest rates are coming down for sure.
Okay, so that's on the fixed income side. I just want to lay it down because in case we missed it. So having said all of this, you guys are constructive. You believe there could be short covering, led up move, etc. and stuff like that. Policy push is the favored one. Is banks the biggest play? And what else comes as a added package? Andrew spoke about tourism and capex, etc. But what is top draw? I mean, is capex beneficiary the top draw? Are infrastructure stocks the top draw, or is it something else?
See, I think you know the government's going to do a push in infrastructure, so it has a multiplier effect across many, many different industries. So you've got to be looking at banks in terms of that scenario, plus capital goods companies. But I'm a little less on the roads and bridges type of construction, and more on the kind of smart manufacturing, smart office blocks and so forth. So that's kind of the more Siemens type ABBs of this world. Than the traditional L&Ts and so forth.
Any contra trades? I mean, we've talked about everything that's in the euphoria, but do you think chemicals could be a good space right now? No one's been talking about IT, unfortunately.
Yeah.
It used to be the darling for the last decade or so. Do you feel like these are also some trades and opportunities? Pharma, IT?